Everybody loves to talk about investment real estate, and for good reason. It can be a great way to diversify your portfolio and earn a little income. In this video, we're going to talk about investment real estate in Northern Michigan and why it's a little bit different, things to look out for if you're thinking about becoming an investor. The first thing that's different in Northern Michigan is that many of our properties don't purely cash flow. So that means they don't pay for themselves. So the rental income that comes in doesn't necessarily cover the cost of owning the property. So why would people do that? Well, the reason is really simple. We're in a vacation market. That's part of the allure to having a rental, right? There's a lot of demand to be in our area in the ski season, in the summer season, in the fall color tour season. People vacation here. That's also why people are willing to buy properties that don't cash flow. They're going to own a second home here anyway. Why not just get the home that they want and subsidize the rent in whatever way they can, right? So they don't care if it loses a little money. It's going to lose less than it would have if they just bought it and didn't rent it out. So that's one thing, that's the main thing that makes us a little bit different in Northern Michigan. Another thing to know, really when buying anywhere, but it's especially true in Northern Michigan, is that since short-term rentals started to boom, again, Airbnb, VRBO, that kind of thing, many communities have responded to that, restricting it. So most of the time it's near or at downtowns that are limiting the number of homes that are allowed to rent short-term through licensing, some sort of licensing program, or saying it can't be done altogether. There are a couple reasons communities do this. One is that renters sometimes behave a little bit differently than owners that have to get up and go to work the next morning. I know I live differently on vacation than I do when I'm at home, and it can be a little bit disruptive to neighbors and the neighborhood. The second reason, it affects property values, right? So it's encouraging people to come in and utilize the properties, and it can make it prohibited to local people purchasing the homes at affordable prices. So the response to that in some communities, certainly not all, has been to place some sort of restriction on short-term rentals. In addition, some associations will restrict short-term rentals. So there might be certain neighborhoods that they want at least 30-day rentals or longer. Again, going back to the type of neighbor they're looking to attract, right? Or dissuade from coming into the market. So some neighborhoods don't allow it. Certain condo associations might not allow it as well. Others still allow it, but only if you use their rental program, that sort of thing. And we have all of those flavors here in Northern Michigan and have experience working with all of them. So after you discover though whether or not you actually can rent it, you want to know, well, will it make money? And as I mentioned, you might be one of those people that are willing to subsidize your vacation property and not necessarily purely cash flow. And you can take into consideration too your hold time, so how long you're going to own the property before you would sell it and what a reasonable appreciation rate would be. There's many different ways to calculate whether or not a property is a good deal. If you're thinking about renting it, we can help with all of those. A really good, quick and dirty back of the napkin way to do it though is the 1% method. So what that is you determine what the monthly rental rate would be, and you divide that by 1%, and that should give you kind of what the upper end of the sales price should be. Now, this calculation has been around for a long time. It's mostly meant for long-term rentals. Short-term rentals, they have a different level of expense associated with it, right? So you may have to hire a property manager. If you're doing it yourself, you might still have higher levels of maintenance in short-term rentals. You might have a housekeeper that comes in and helps you turn the property over. There are expenses associated with that that are a little bit greater. It still gives you a rough idea of whether or not the property is a good deal. So how that works is you would determine what the monthly rental rate is. And I know that these Hideaway Valley units, they rent for about $60,000 to $75,000 a year. So if we take that 60 number and we divide it by 12, that gives us a monthly rental rate of $5,000. When you divide that by 1%, that gives you $500,000. This property is listed at $339,000, which would suggest that this is a good investment. Now, again, it's just back of a napkin. There are a lot of things that go into the decision to buy, and we would love to talk to you about that and help you in your search. We are all very well versed in either knowing the answers or finding them out for you. If that's you and you would like to learn more, just give us a call or, of course, slide into our direct messages. Thanks for tuning in.